Alright guys, welcome back. So Tesla stock update. So last time we talked about this one, March 24th, and the headline was pretty much, title of my video was FOMO and short squeeze, and it was March 24th, and this is exactly what the stock actually did. So essentially what I was saying that, just go back to this time frame where a lot of people were feeling the FOMO of like thinking that, okay, so Tesla has dropped so much, 50, 60, whatever the percent from its highs. And then as it started going higher, everybody was like, oh man, it's running away. And I was the one saying that, no, it's not going to happen until they report earnings. And earnings can take the stock higher or lower, and the expected move for the stock was essentially from these levels of like $280 levels. So basically $42, $43 levels, $40 it was implying upside or downside. So we came as low as 220, and I was saying that it could go as high as 320, which did not happen, but of course it moved within its range. But what happened is, if you pay attention to this purple line, this is the option expiration closing price from March 21st. So every third Friday of the month is a big monthly option expiration. So when stocks move like this, due to volatility, due to shorts getting squeezed, due to FOMO, but no fundamental reason, they get pinned at times for a month or two until the earnings come out, the actual catalyst, guidance is released for the quarter ahead, for the year ahead. Then it can pick a direction, and if you are somebody who's directional, like who plays stock to the upside or downside, doesn't matter what you do, then you can play it after the fact that company itself has given you guidance that, we're doing better than everybody's expecting, or actually, we're in trouble, we're having a hard time, then you can short the stock. But if you were somebody who was trading options like me, you would lose money being directional with, let's say, at least you are playing a couple of weeks out, okay? Unless you're trading weekly, then you might have had some in and outs where you could have traded this stock up or down. But look where it closed. Essentially, it closed wherever it closed, very close. So 248, that's where it closed last option expiration. And this option expiration of April, it closed like $8 off of its that closing price. Expected move was $40. That was the range it gave you, like it traded with that much of a range, but it closed at that level. So what now? What I'm watching from here. So if you watch that video, sure, I was giving an example of how Tesla tends to do that. And if it wants to move after, it will move one way or another because of its earnings. And I was giving an example of last year where year started identical, and as soon as stock was everybody was super bearish and stock started moving higher, but then started moving higher because of earnings after going lower, like 30, 35%, 40% being down for first quarter of the year, essentially year to date. So right now, Tesla year to date, where is it? How much is it down? Same thing, 40% down, 40.2% down at this price of 241. So if they're going to release a little better numbers, sure, we can see the upside move, but upside again now limited to these levels. Again, I'm going to be watching 200-day moving average 290. This is your resistance. This is where even price has rejected in this window of option expiration between March and April. So that's the very big pivotal area I would be watching, 291. Above that level, sure, it can push higher, but we know overall market has been in it's been super negative. I don't know what's going to happen with the rates, and overall sentiment does not look good, right? And it can definitely form longer shoulder, just it has done like this, and it might be looking on a daily chart as a head and shoulders, where the crack of 212 right now, this is my support area I'm watching, could send the stock lower to the consolidation area that we had in the last year, somewhere around these 170, 168 areas. And then we have a huge gap that was created last year in this zone between, I want to say, 145 to like 157, and gaps tend to get filled. And I actually watch very often, whether it's S&P 500 or any stock essentially, for those sorts of gaps to get filled, and I watch those areas as a possible like support or maybe even like price target areas. So in this title of this video, I'm gonna set this as a potential area to look for, maybe some sort of a support once the 220 area cracks. 170 is next, and then below 144. I know it's a pretty big statement to make, but target to make, but I mean there's no problem for me to see. I know this is a $776 billion company. Essentially what I'm saying, that another $100 drop, another 40% drop, very likely maybe like in the next 6 to 8 months, again depending what overall market is going to do. So if overall market starts to go lower and the Tesla reports bad earnings, and it just struggles with this area of 211, then yeah, I would be watching first 170, and then final destination, in my opinion, is that gap fill area of 144 from last year. So in terms of option activity, we can just take a look at, we can go actually as far as we want. By looking at option market, I can say that, yeah, like this OPEX to OPEX, if you are directional like me, again, I don't like to do spreads or selling contracts, you lost money. Anybody who made money, they were the ones that made like selling calls and selling puts, which market makers, not market makers, the big money, that's what they do. They because of their positioning, selling calls, selling puts, pins the stock at certain price so they can capitalize the premium that you purchased, and with that made money, that will just keep doing whatever they are doing, like every OPEX to OPEX. Some might do zero DTEs, but I don't pay too much attention because they're too volatile. I can trade them. But anybody who made money, it's pretty much option sellers. That's why option market, even on Friday, I can just look at the Friday stats for Tesla, it didn't look directional because they haven't released the earnings yet. And going into earnings report, so which is, when is it coming out? So the earnings next week, apparently 22nd of April, Tesla about to report earnings, and implied move for that week is $29. So this is elevated. This is, if you are trying to play these moves and Tesla doesn't move as much as this, whatever the market makers are pricing in at this point in time, then you will lose money. It has to move for you in order to make money, like more than this, whatever it's pricing. Sure, before earnings you can try to flip in and out, but so expected move going into next week earnings report, so essentially $30, let's give or take, 270 upside potential, and to the downside $30. This is your level around like 212. That's your support area. So that's what I would watch for Tesla, and that's what I'm watching essentially. So upside, if it clears 290, the 200-day moving average, sure, it could definitely squeeze anybody who was trading this stock in this box right here. Anybody who is short in this box right here, it could definitely take those people for a ride up to 360 if they surprise. But if not, then if the longer Tesla hangs out at these low 200s, 220, like 230, 240, then it can certainly go lower to test the what is the level, $170 level. So that's what I would be watching for TSLA. So that's my update, and that's what I'm watching going forward. See you after they report earnings, I guess. So that's the update video. Thanks for watching. If you are new to the channel, don't forget to like, subscribe, and these videos are not a buy or sell recommendation. This is purely for educational and entertainment purposes only. Take care. Peace.